In this episode, we share several recent updates when it comes to your federal and private student loans, and we break down the difference between something you really need to pay attention to and a news story that seems very scary, but for the time being can be ignored. Let's get started. Are your student loan payments or loan balances a major obstacle in your financial life? Then tune in and let's escape student loan debt. Hello, my name is Brenton Harrison of Escape Student Loan Debt and your host for the Escape Student Loan Debt podcast. It's been a couple weeks since we had our last episode, and in that episode, we did our first live review of the student loans of one of our community members. I hope that you all enjoyed that episode. And as a reminder, if you want to have your loans considered for a live review, you can go to escapestudentloandebt.com/review, and we will start the process of seeing if it's a fit for the show. In this week's episode, we're going through several recent updates as pertains to your student loans, because in the last 2 weeks, there's been a lot of news stories and updates from the Department of Education as to processing of applications and collections and all this different types of things. And I will say that it's probably 50-50, where some of those things are news stories that you definitely need to pay attention to. And the other half are things that's like, yeah, this could happen, but it's unlikely to happen. And for that reason, it's definitely not something I would stress out over for the time being. So let's start with some things that are updates that I would pay attention to. And one of them isn't actually directly connected to student loans, but it's something to be aware of. And that is the changing environment when it comes to things like tariffs, when it comes to things like bond and treasury yields and interest rates in the general economy. If you pay attention to any of the socio-political stuff that's going on, you've seen stuff about the president pressuring the Fed chair to lower interest rates, and then the yields for 10-year treasuries on the rise. That's not something I expect you to automatically be an economist and know all the things that are going on, but we've shared that when you see interest rate changes in the environment, if you have federal student loans where maybe you're right on the fringe of deciding to actually pay it off or pursue forgiveness, well, the more craziness that goes on with these federal student loans, paying them off in full may look more appealing. Conversely, if you already have private student loans and maybe your student loan is at 8 or 9%, if you were to stumble across an opportunity to refinance it with another lender at 7 or 6%, there's some real opportunity there to lower the cost of total repayment. So we've mentioned on this podcast before that with private student loans, it's a unique structure in the fact that for most lenders, you can at least get an idea of what your rate would be without having to do a hard pull of your credit. So I always encourage people who either already have private student loans or are considering private student loans to set a ticker or a calendar reminder to check the rates at least every quarter, because as all of these fluctuations are going on in the marketplace, if there is a stretch where there's an opportunity that you would miss if you weren't paying attention to, you want to make sure that that's not the case. So more of an alert to keep your eyes open and alert so that if that opportunity comes up, you are there to pounce. Next, let's talk about student loan collections. This is hopefully something that nobody in this audience is dealing with, but having student loans in default is a terrible financial circumstance that can affect everything. So for example, if you have a federal student loan in default, you are unlikely or just won't be approved for a federally backed mortgage. Depending on how much and how long you've been in default, you can actually see your wages garnished as a result of that default. You can have your tax return garnished if you are due to get a refund. In some states, you can even have your professional licenses revoked if you are in default for a federal student loan. But the collection process for defaulted loans has been paused since the pandemic. Well, recently, the Department of Education said that starting May 5th, they're going to resume the collection efforts for those defaulted student loans. Now, unfortunately, there was a program during the pandemic that has since expired where you could get out of default very easily. But now that we're back to the old rules, I will remind you that if you have never been through a process called rehabilitation, that is an option for you. Rehabilitation is a 9 to 10 month period where you can follow a series of rules, one of them being that you have to make a certain number of payments on an income-driven repayment plan. And once you've been through the rehabilitation process, you have that default removed from your credit report. Now, the late payments remain, but the defaulted status is removed. There's a whole host of benefits to having your student loans out of default. If you have already gone through rehabilitation because you can only do it once, then your options are to pay back the debt, You can also consolidate those student loans into a new loan, which would open you up to more payment plans and other benefits, but it would not remove the defaulted status from your credit report. So we've done an episode on defaulted loans in the past. I will link to that in the show notes, but just know that it's a very serious circumstance. If you have loans in default and you have not had any money collected, that is due to change on May 5th in a couple weeks.